From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, July 16th. You're listening to the Macrocast. This is Tony Prado with Hamilton Place Strategies, Brendan Walsh, and John Fagan with Markets Policy Partners. Guys, it's kind of an eventful week. We have news on on the infrastructure plan, on reconciliation, a little bit clearer picture there. What's happening? We had Chairman Powell with Humphrey Hawkins' testimony on the Hill in the House and Senate. Janet Yellen doing a long interview, and lots of talk of inflation and what's happening in the markets. We had earnings, so lots to talk about today. The news this morning that give us painted a picture for us is the retail sales, the highly anticipated retail sales report at 8:30 this morning. Brendan, what do the numbers tell us?
So last month, May was down 1.7%, and consensus was looking for June to be down 0.4%, and it came in at a positive 0.6%. So that was definitely a very welcome positive surprise. And a lot of the uncertainty was overestimations of how the consumer, would continue spending, especially as stimulus checks were running off. Though they didn't run off. We got new stimulus checks this week with the child tax credit. So we're never-ending federal stimulus, it seems. But those checks came out after this retail sales number came out.
That's no small thing. I mean, it's like
no, it's a big deal. Pretty I mean, people are getting $300 to say $700 a month, and it's not just a one-time thing. It's going to be. How did they pass that? It was kind of below the radar. Was that an act of Congress, or did they have leftover money?
Yeah, for people who may have missed this, which I don't blame anyone for missing it, because there hasn't been nearly enough attention to it, as you're alluding to, is. This is a $300 per child tax credit paid to you in cash for children up to age 6, I think, and then after that, it's $250.
It's a sliding scale depending on age.
But that's it. That's the scale, and it doesn't decrease from there, right? It's $300 or $250 per child.
Oh, I get you. Okay.
And so so this is like a lot of money, money directly to families in this country, and I don't think it's gotten enough attention. And it's
40 million families, which is, I don't know, 120, 150 million people.
And there's broad eligibility. So that's a lot of money that's going to be spent. And, again, this is, so we had, blowout retail sales number today before these checks are going out. And I don't even call them stimulus. It's a 1-year program.
Yeah,
but the expectation of all of us is this is going to become permanent. This is essentially to become a somebody referred to it as a Social Security for children.
Children, yep.
And this is like an infusion into these households with young children, and if the math is right, it's going to lift a lot of children out of poverty, which is a great thing. And make lives easier for a lot of families raising children. It's a great thing. You have to expect, though, as we talk about inflation, that, if you make more money available, you're very likely to see prices rise on certain things. So that's not, we'll see how far that goes. But this is, to me, one of the biggest programs, that's going to impact people, that's gotten the least attention of anything I can ever. Yeah.
And correct me if I'm wrong, but there also is potentially more money coming in a reconciliation infrastructure bill for programs like this also, right?
Yeah, there's a lot in the what do we call in the reconciliation bill with that package? Family.
The Jobs Act, Build Back Better is the bipartisan one. What do we call the reconciliation? I forget.
I don't know. They're both American Jobs Plan, right?
Yeah.
So so a blowout number. It's
and it was very much on services. So people kept going out and going to restaurants, and gas stations were up, which is an indication people are traveling. So it is spending on things that you want. Actually, the number was also weighed down by the lack of cars available. So the new and used car component was negative. So the number actually could have been a little higher. And actually, we got indications from Taiwan Semiconductor. They reported earnings this week, and they gave a message to the car company saying, "We've fixed our log jam, and we expect to be able to be delivering a normal amount of semiconductors to you going forward. So get ready to start producing."
All of this is really good news. To take a step back, it's a little surprising when we think about the past few months and how the economy is recovering and where we are in the recovery. We haven't had a lot of data points that you can point to and say, bang, that is a strong data point, unambiguously, aside from inflation.
Right.
Inflation has been...
even the really good numbers, even the really good numbers have not hit the aspirational numbers, right? Yeah.
That's been the consistent...
And that was the thing. The U.S. data hasn't been terrible, but it's been very disappointing from what we thought it would be back in, say, March.
And even the last non-farm payrolls number, which was a great big encouraging number, and then you look, your eye goes down the sheet and you look at the unemployment rate and it's, up.
Yeah.
But there's been obviously lots of distortions going on, but this is one of the few data points over the last few months that you can look at and say, this is pretty clean. This is unambiguously strong, and tells a really
expecting it to be negative, and it was positive. So just simply there is a good sign. It
says something about our powers of prognostication.
Yeah. It's been a lot more difficult in the last 6 months to predict.
This muddled aspect to U.S. economic growth, where it's kind of undershooting expectations, obviously not bad, but undershooting expectations, has come alongside a number of other factors that have clouded investors' economic outlook for the U.S. And that really is, the legislative fortunes of the American Jobs Plan. We'll talk a little bit more about that later in the show. But that, the big, huge 6 trillion, largest numbers, it's whittled down pretty considerably from there. And there's a lot of questioning whether the Biden administration really gets even an appreciable, if they can even make it to $1 trillion.
Yeah. But John, that's a good point about the markets, where kind of from a 60,000, if someone that doesn't pay huge close attention to the markets or a policymaker, the S&P and the Dow Jones have done well. They've either been flat to up the last 3 months, but the churn underneath, we've had like 6 different rotations from growth to value to growth to value. It's been a lot more, the uncertainty in the data has led to a lot of rotations in trading, which for some active asset managers has been painful.
Yeah, and the summer trading has really featured a reversal of a lot of those trends that we saw earlier in the year that were predicated upon the rosiest reflationary assumptions. Yeah. And so we just saw over sort of the June and into July period, tech stocks, for instance, beginning to outperform again, topping the performance of industrials and some of the other more economically linked sectors in the S&P 500. We saw, obviously, the Treasury yield curve, which is a traditional bellwether for growth expectations, flattening out pretty considerably over the last few months. 10-year Treasury yields, longer-dated Treasury yields sinking down. We're at like 133. We were almost, we were like knocking on the door.
1.75,
Yeah, it was a...
But more importantly, everyone was talking about how quickly we get to 2,
Yeah, and so... Yeah. Despite the fact that inflation is still making a lot of the headlines, financial markets have moved on to some extent, at least on the margin, to worrying about overheating worries ebbing and being replaced by concerns about, a stalling or disappointing. And the unspoken thing behind a lot of this is the Delta variant.
I agree. Yeah, especially globally. Asia is really shutting down again. And countries that really didn't have much of it, like Thailand and Vietnam, are now seeing huge spikes, and they're not even close to fully vaccinated at this point.
The UK
too, yeah,
way up.
So it is very encouraging from the data that we see. If you're vaccinated, you could get it, but you're not going to the hospital. You probably won't even show signs. If you don't have it, you're going to die.
This is. We should just note that we are not doctors on the Macrocast.
But I have played one.
Should take our medical predictions with a grain of salt. But I think it's true. Obviously, if you're there are stark differences in the spread and lethality of the Delta virus between vaccinated populations and unvaccinated populations. It is incredibly dispiriting. The anti-vax movement continues here and elsewhere.
Yeah, it's not just an American thing.
No. In Russia, and then you have speaking of Asia, a lot of countries in Asia that had done a remarkable job of keeping COVID out of their countries now are essentially landlocked, right? They can't reopen. They can't open their borders. Australia, New Zealand, and makes it really difficult. Japan is in a difficult situation. So they won the battle, but it seems like they're losing the war.
Yeah. In the end, when we look back on, we can criticize the guidance we were given with mask and no mask and wash your hands, but they knocked the ball out of the park with the vaccine. They did it under a year. And in the end, that was the only way this thing was going to stop.
And that really sets the stage here for the sort of, we've talked a lot about the macro cross currents that are buffeting in markets, and markets have struggled. I mean, equities are still very upbeat, but markets have really struggled to find direction. And as Brendan alluded to, underneath the surface, the rotation among the stocks and the themes, the shifting between the themes, there's going to be a moment, I think, particularly in the fall, and we've talked about this, that is a clarifying kind of few months.
No, you're right, because
combines back to school.
Exactly.
If we're going to have a big variant problem, it's probably going to be seasonal. There's going to be a seasonal factor there, and it's going to be manifest by September, October, when the kids go back to school, when people get back into the offices. The fall, like September, October, and probably November, is a real test case for whether normalcy, we can really leap up to that equilibrium, that the old normal.
No, you're right. We've talked about it. That's when the Fed, those are the data points, especially jobs data points, that the Fed needs to see in order to have confidence to start a taper program. Every parent in America is expecting their kid to go back on September 1st. If that doesn't happen, it's going to be an economic disaster.
Yeah, and it's not as though the fall is our last chance.
Right.
But, it's going to be a period where, if we're going to need boosters, we're going to be getting them by the fall. And it is that there are so many things happening. We'll also know whether the American Jobs Plan is on track or whether it's gotten, bogged down on Capitol Hill by September, October. And so I think against that, there are lots of confluence of factors that should be clarifying around that time frame.
Yeah, I agree. I mean, I think, we need that, obviously want to see that information. As you described it, and as we intend to see, it seems like, it seems like market participants are buying Chairman Powell's story, right? If you look at 5-year tips, they see, they're pricing in inflation. You look at the 10-year saying it's not going to last long. And is that what we ought to be reading from this? That they whatever all the talk is, that they've bought his story. He got a lot of pressure this week in testimony, especially from Republicans in the House and Senate, on inflation and whether he's overlooking the significance of it and ought not to be doing something about it. But it doesn't seem like that level of concern is being shared by investors.
You're absolutely right, Tony. The markets, to take them at face value, and obviously, summer markets, and there are always some technical issues you can point to, but particularly a big, deep liquid market like the Treasury market, that's one that you don't want to second guess necessarily, and you certainly hesitate to second guess that. And the flattening of the yield curve, the lower 10-year rates down at 133, down from around 180, that's a 50 basis point drop, and 10-year tips down at 230, something like that, 2.3%. That's not an eye-wateringly high number. It's relatively consistent with the Fed's mandate. And the 10-year, as you pointed out, Tony, is importantly lower than the 5-year break even. If you look at inflation swaps overseas in Europe, they're tracking the U.S. They've come down off the May highs. And it really does. If you look at traditional inflation hedges like gold's down for the year and it's going nowhere. And it's hard to see inflation fears in the market. When we saw those big numbers come out earlier in this week, the consumer price index and the producer price index dramatically outpaced the expectations. And the markets didn't fall out of bed. You didn't see a big cataclysm in the bond market. Took it in stride. Yeah. And it's the markets aren't always right, and Fed chairs aren't always right. But in this situation, they seem to be pretty much singing from the same hymn book when it comes to transitory inflation.
Yeah. Well, let's take a break and come back. I want to talk a little bit more about the political economy piece of this, both on what we think is going to happen with the legislation that is should be moving. It's going to, next week we are going to be talking about some things on the floor, and talk a little bit about Chairman Powell. So when we get back, let's get into those topics. You're listening to the Macrocast.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The Civic Science Economic Sentiment Index, powered by HPS, accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through HamiltonPlaceStrategies.com.
All right, we're back on the Macrocast. So, guys, so Chairman Powell was up on the Hill. A lot to go. I mean, and we could just shorthand and say he was pressed on inflation. He repeated his intention to see through inflation, and he's going to be fighting this rhetorical fight for quite a while until we start seeing, hopefully, inflation top off, level off, and return back to closer to his target range. But there's another game here that Republicans are doing. It's some of them I'm sure legitimately have some concerns about inflation, but they're really using this as a cudgel to explain why they think spending another $4.5 trillion is a bad idea, right? I mean, so it's not just that they think there's inflation; it's and that the monetary policy is missing the mark. It's that, and therefore, we should not be spending another few $1 trillion on this. And so, in that backdrop, we have still seen progress on the two bills, the hard infrastructure bill, the bipartisan infrastructure framework is going to be legislation. It looks like, and so we're going to see movement on that, and then we're going to see movement on eventually on the reconciliation bill, which was announced earlier in the week. We still need a lot more detail on it, but around $3.5 trillion as well. You add them up, you get to over $4.5 trillion. But I heard somebody critical of it yesterday and talking about what a share of GDP that is, which is the wrong way to think about it, because that money is it's going to be spent over 7 or 8 years. So, that's.
And that's the best case scenario. It might be over 20 years.
What is that? It's for? Yeah, it's a share of $100 trillion, not not $20 trillion. So anyway, that's where we are. We have something real, and we're going to be counting, vote by vote on this now.
Yeah, it's obviously Senate Majority Leader Schumer is going to try to force the bipartisan bill on a relatively expedited timetable here. At least he's going to try, and that will give them presumably the ability to pivot if they can't get the votes that they think they need to get it across the line in a bipartisan fashion. It'll give them the time and ability to pivot to a one bill solution and round some of that physical infrastructure into the reconciliation bill. It's not easy. It's not clear, but that is our base case has been, whether you go bipartisan or and with the reconciliation, or you end up with a single bill solution. At the end of the day, the Biden administration's got to have this. They got to have it. They absolutely.
It's not a question of whether there's going to be additional spending. There still could be adjustments on the number, but there's going to be a significant investment in infrastructure, hard and soft infrastructure.
Yeah. And one of the things that we keep talking about with our clients is once you get through this legislative aspect, for something like infrastructure, as you said, Tony, this and you mentioned this too, Brendan, this is something that Wall Street needs to have drummed again and again into this narrative, which is this is not the 1.9 trillion stimulus that hits straight into the veins of the U.S. economy. Execution is key on this one, and execution and being able to identify the speed with which this money can be translated into real economic activity and projects on the ground. That is where the rubber meets the road.
Literally, yeah.
The infrastructure joke there, but that is going to be as hard, if not harder, than the legislative fight. Because we just don't do infrastructure particularly well in this country.
No, but we don't. There's sort of like the regular stuff that we've had on track. There is annual infrastructure spending. There actually is a lot of infrastructure spending on, year by year. A lot of it is necessary maintenance. We should remember every time you go out and build new stuff, you're also building a new long-term liability for the country to go maintain it. And maintaining isn't sexy. Putting on check it's the thing that irritates you, because that means like the road's closed for them to do resurfacing, right? And like that resurfacing is really necessary. It has not increased the productivity of the roadway very much, that extra layer of blacktop or the improved layer of blacktop on it hasn't made you go faster on it next week. And so, but it's necessary and it has to be done. So so I was always reminding people these are, you're adding long-term spending obligations when we do them, but we all love them. We love our roads and we want more of them, and bridges and tunnels, and a lot of repair for safety and for some productivity enhancement needs to happen, and it's going to. And we shouldn't minimize, by the way, the $1.2 trillion hard infrastructure package sounds puny. Because we've been tossing around
bigger numbers,
$1 billion bills for the past 18 months. It's the biggest infrastructure bill ever in the history of the country. So this is significant. We've been trying for years to get this aspirational $1 trillion infrastructure bill. All the guys out there saying what we really need is $1 trillion of infrastructure. And we're going to get more than $1 trillion of infrastructure with a lot of fresh new spending on it. So that's good. And then this other spending that comes in the reconciliation package, which you can love it or hate it, but it's pretty significant. It's going to have some pretty strong, not just spending, but structural changes are built in there that I think are really important.
One of the things, just to go back to something you said earlier, Tony, the GOP's argument against it and focusing on the inflation aspect. I think it's there are a lot of very interesting threads on that. One is it shows just how much Washington has moved on from sort of the debt panic, right? Yeah. I mean, that is not to say that debts don't matter, but the old like Tea Party, that was the whole issue was, we're mortgaging the future of the country. We're spending money on debt. They're focused now on the consequences of debt. And I think that really shows just how the credibility of both parties, the credibility of the GOP on fiscal rectitude, that ship is sailed, and it's focusing on something different. It's not as though nobody is paying attention to the deficit and debt in Washington, D.C., but it shows just how much the debate's moved on.
We're in a weird time with that, John. I was asked about this earlier this week about how the debt ceiling, for example, is going to play out. Because we have the debt ceiling technically runs out on July 31st, so 2 weeks from now.
Something that Wall Street is not paying attention to.
They're not, and Janet Yellen has tried to send warnings that she may run. The extraordinary measures may exhaust themselves in August. I don't believe that's true. I would be. She better be should be, sending brass bands down the street if that's an offhand comment in a interview, or we got to know if it's mid-August because Congress is out of session. So that's not an ideal time to deal with it, and we know they're not going to deal with it in the next 2 weeks. So, so it's more likely September. Later they'll be able to stretch this out a little bit, and but we are going to have a vote on this. And the question was, people, Republicans hate this vote on raising or suspending the debt ceiling. It's going to be a hard vote for Democrats also. And, I just went and started looking around to see, what the history is of members who have lost election because they voted on the debt ceiling. And I don't see any evidence at all that anyone ever lost an election because they voted to elevate or suspend the debt ceiling. I just don't think it's true. It's just I think it's one of those Washington myths out there that everybody out there, tries to work.
Well, maybe it can be the opposite. If you were the guy that blocked us being able to pay our bills,
the net is it's no worse than zero, right?
Exactly.
Negative, right? You may be more likely to get elected for voting if you voted for one than if you did it, right? I mean, I see no evidence that it's a reason why any member of Congress has lost a seat. And yet there's
even people that generally hate big government. When big government shuts down, you kind of get annoyed that it's shut down.
And, a lot of these guys have already voted to raise the debt ceiling multiple times when Trump was president.
We didn't have any problem for 4 years.
Yeah. But it is one of those things that is going to feed into this broader theme. And we know that the political rhetoric between now and 2022 is going to be about, inflation and Democrats and Biden spending. And so the debt ceiling is one of those things that, if you want to stay on one side of that debate line instead of the other side of the debate line, I get it. But I still think the debt ceiling is going to get done because it has to get done. It'll be attached to some must pass piece of legislation, but it's not obvious that it's not a slam dunk that it will be the reconciliation bill, though it could be the reconciliation.
I get you. Yeah.
So that's gonna get done, and we're gonna look in closer on vote counting on the movement on these things and composition as we go forward. I do think that one of the things there's been a lot of speculation that Mitch McConnell would play Lucy in the football with the infrastructure bill and let these guys go out there and negotiate it and then kill it at the last minute and force the Democrats to put it all into the reconciliation bill. I don't think he's going to do that. And I think we would have seen signals from him that he intends to do that. I think that they're actually going to give his guys a different message, which is, see, when you work with us, you work with Republicans, you can get a really good bill on things that you like and it's paid for, and it's going to improve things. And this is what we've wanted all along, and we were able to do this. And we forced the Democrats to put all of that profligate spending, all that social spending, in this other bill that they passed on a party line vote. And so it's probably this is like medicine that the Democrats are going to have to take in order to get this thing done. Because I actually think if you put everything into one big bill, boy, that's a big roll of the dice, and makes it really, really hard. Because now you know that you only have 50 votes. You're never going to get Republican votes, so you better hold Tester, Sinema, and Manchin, and they just gives them a lot of power. But that's we'll see how that plays out. But I still think we're looking at two bills.
And I'm with you that because everything in the end is about the midterm election. And as a Republican, I would much rather run on that narrative than we just didn't really do anything for 2 years.
Yeah, I think they get to take away the part, that they're the party of and they just blocked things to say just blocked things. We just, because we, forced it, and our guys were leaders. We were able to get this really good infrastructure bill that, with all these Republican, they'll say, right, all these Republican ideas in it, and hard infrastructure, all the good things we really like, and we had no part on that Democrat thing over there.
Right, but also once you pass the bipartisan bill, the Democrats have to pass the big reconciliation bill, because then you're running on, well, we passed the Republican bill and we didn't really do any stuff that you guys wanted us to do.
Yep. Yeah. So I think that's where we are. We'll see.
I think it makes sense.
Yeah. Again, well, there's a lot to battle in there. We didn't even talk. We're only talking about the spending side. There are tax issues.
We can talk about next week.
We'll get into those next week. Let's come back and earnings kicked off this week. Let's come back and take a few minutes on take a look at earnings and see what signals we get from there. You're listening to the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter at marketspolicy.
And we're back on the Macrocast. Brendan, it was fun to get earnings again this week. So earnings season's always fun, because we're dealing with real things.
Yep. Yeah. And earnings season always kicks off with the big banks, which I really like too, because you see how each individual bank is doing against each other, but also you get a lot of macro insights from it.
For sure.
And the banks are doing quite well, which should be expected. The stock reaction hasn't been as great, but when you take a step back, the banks had a massive rally in the last 6 months. So a lot of it was priced in. Also, a lot of the beats have been due to higher than expected reserve releases from last year, where the regulators and themselves built up huge war chests in the assumption that obviously a pandemic would create a large amount of credit losses. The banks were very heavily capitalized, and we also spent a lot of money on the federal side to counteract the effects of the pandemic, and the losses just weren't there. Well, also the housing market massively went up, so people built a lot of equity in their houses also. So the banks are in strong earnings situation, but more importantly, in very strong capital and safety and soundness situation.
No question about that. I mean, I thought it was interesting to see, Chairman Powell pressed on safety and soundness of the banks yesterday by Senator Warren, but because I don't think there's ever been in history a time when the banks have been stronger.
Yeah. No, I mean, congratulations. Dodd-Frank worked. Take a little victory lap. Don't criticize it.
Yeah, and really should, what all the banks did, and this plays into earnings also. One of the things the banks did was they set aside massive amounts of reserves to reserve against expected losses, which didn't come. So
even taking those reserves they were still profitable last year, less so, but it wasn't like they had massive holes in their earnings.
Not at all. And so at a time when you could have, taken the opportunity to commend the banks for, doing the right thing and coming through the crisis in a good way and taking credit for
it. Yeah.
Take credit for it if you want. I don't care. Instead, there was like another attack on the banks, and it was really absurd.
The counterpoint, which was an avid listener to the Macrocast, pointed out in another session when we were talking about this. Go nameless, but this avid listener said the reason that the banks are in such good shape is because regulators stayed tough on them, and this is to go easy, to go soft on them now, to say, hang up a mission accomplished banner is the wrong way to go. And this tough line ensures that the banks will stay as healthy as they are now into the future.
Yeah, but I would just say, though, Senator Warren's argument was that regulators weakened oversight of the banks over the past 4 years. Right.
Oh, this was right. Yeah, the quarrels. Yes, they've got a big quarrel with quarrels.
Yeah. So you had 4 years of moderate pullback of it wasn't even more.
I think it was tweaking. To me, it was. Look, the critics have always anything you do that if it's a Republican or a Republican administration that's doing it, and you're a reform, anything you do, those critics will call it loosening, weakening, letting the banks run wild, right? You can never just reform it. And I think what really, Randy Quarles did, these were sound reforms, and they were within the discretion of Dodd-Frank. And so
I would have expected the Trump administration to do a lot more deregulation in their 4 years than they did. Really, they kind of left Quarles alone and didn't put a lot of pressure on him. And I feel like he just did the normal job, irrelevant of who was president.
Yeah. And I think at the end of the day, like they were then tested in a crisis and significant economic downturn and market volatility, and came through it well. So that's a good thing, when government does something and it turns out well, it would be really nice if people would get together.
Yeah.
That was a good, I don't have a problem. I'm what once was a Republican. I'm right. And I don't have a problem saying, looking at some of the spending or Biden programs and say, well, that's a really good thing. I'm glad they did it. Right. It's great. The child tax credit, I think, is amazing. Actually, is a really good thing to do. Not a traditional Republican view, but I think it's some of these things are good things to do, and they have a good impact, and should be open-minded about them. And I think it would do. I actually think it would do Elizabeth Warren credit if she weren't so relentlessly predictable.
Every time.
I mean, I could write her comments for her.
Well, right now, the banks are one of the struggles for their earnings going forward is there's just no demand for loans right now because everybody has so much money. So if anything, they want to give people loans and they're not able to because no one wants to take them out.
Yeah. What else is? What other earnings are? What are we looking at to next week? What do we have? Some
now going forward, we start to get into a lot of the bigger tech names, which by all indications are still chugging along just as well. We didn't stop ordering from Amazon because we're allowed to go outside again.
Yeah, next week's data calendar is pretty light. We've got the preliminary purchasing managers indexes on the manufacturing side around the world.
One interesting thing. So the ECB has a meeting.
Yeah.
And then, but the China has a meeting on their loan prime rate. So the Chinese economy is slowing down. And more importantly, the, social stability is becoming a little bit of a question. So China has that fine line of trying to ease a little bit to help the economy without overheating it.
Yeah. People's Bank of China has been, saying we're still neutral. They've really not touched the policy rate. They've played with the reserve requirement ratios a lot more, probably stick steady.
Well, we'll keep an eye on that for sure. And I'm not upset about not having too much data next week. I really am more interested in earnings right now. I'm interested in how firms are doing and on their individual outlooks, also on their earnings calls, on how they, what they're seeing in their own sectors. I think is really interesting right now.
Mm-hmm.
Yeah. All right, guys. Have a fantastic weekend.
Oh, that was a fun one.
Yep. We'll catch you next week on the Macrocast.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.